Chris Gavin, with the banking industry, the financial world, how does all of this, when you guys get together with your colleagues and industry leaders, how does this particular invasion of Ukraine play a role in the future of what you guys are strategically planning for?
Well, I think the first thing is the banking side is the interest rate environment, and we saw immediate effect on that. Where it looked like the Fed was going to, they were signaling an increase of 50 basis points in early February, and then with the Ukraine invasion, they immediately backed off that, and we saw earlier this week where they've raised interest rates 0.25%. So I think, so the forecast for interest rates going up has certainly been tempered now with what's happened in Ukraine. So that's the first thing. And then I think long term, though, we're seeing still just general concerns about what's going on in the world. The long-term rates are still projected to actually, stay kind of in the range, like the 10-year Treasury rate is around been trading around over and above 2%, and it's been that way since it started increasing about a year ago. It's got up to that point, and it's been trading there in the last several months in that range. But so it's projected to stay in that area. So I think that's good news for farmers, in the fact that the cost to borrow long term should stay kind of still in a pretty good area. It's not anticipated to go up a lot, even though we'll see short term increases in rates. That's going to increase the rates on the operating loans. Certainly going to add expenses to the farmers, like expenses in the other areas. But yeah, so I think obviously just the uncertainty. There's never been so much volatility and uncertainty, and that's I've heard. The comments this morning at breakfast, we talked a little bit about how's Wall Street dealing with all this. It seems like, with the Dow at 34,000 still, I mean, with what's going on in the world, it just seems like what do they know, that we don't know? They're usually a pretty good predictor of what's going to happen. So I guess that's maybe good news that that the market's held up like it has.
That's a good point, Chris. Ken McMillan, next week you're giving us an economic outlook just sort of for the Rotary International, and you were also at Monmouth College as a business and economics professor. Can you kind of summarize what you see from an economic standpoint, this particular invasion of Ukraine, what this impact will have, what you've seen in the past compared to now, what we can expect?
Well, I came here to get the answers so that Monday I won't look like a fool when I describe the economy. Uncertainty and instability are any economy's biggest challenges, and that's certainly the case in agriculture. I've been appalled to watch nightly, early in the morning to late at night, what's happening. There are a lot of things about Ukraine that nobody talks about, like how much money is the world going to have to provide in order to rebuild the infrastructure, to open whatever Ukraine's ports are and so forth. My greatest concern for the economy here is that it's created so much uncertainty. I don't know why anybody at this moment would want to make an investment in expanding anything. I don't know why anybody would really want to make an investment looking forward for the future, because of the huge amount of uncertainty that's involved. Farmers have to make decisions still about whether to try to find a new combine, whether it's in the grain business, trying to hire. I mean, if Jake is having trouble finding somebody to run one of those elevators. Part of that's all related back to all of this stuff that's going on. So I'd like to have a real solid answer for you, and hopefully between now and noon on Monday, I'll have all of this sorted out.
Vanessa, before you let Ken sit down there, weren't we in a similar situation in the late 70s as we moved into the troubling times of the 80s? We had kind of our own version of an energy crisis going. We had raging inflation. The Fed was raising interest rates, and I imagine, Chris, they got considerably higher than what we see today for darn sure. Weren't we in somewhat of a similar kind of set of circumstances?
You know, when I was in Washington, D.C., the energy prices got so high, and the energy supplies were so tight that you could only buy gas at a gas station if your license plate was an even numbered. You could buy on Monday, Wednesday, and Friday, odd number on Tuesday, Thursday, and Saturday. I don't even remember whether you could buy gas on Sunday. You know, I was out there before the Soviet Union fell, and for about 10 different years, I taught comparative economic systems, and we talked about why the Soviet Union fell and all of the problems related to that. So, again, it really goes back to the uncertainty. We have had to cope many times with shortages. We had to cope with inflation that was high. We had to cope with interest rates when the prime rate was, what, 17% or something like that. I know when I went to borrow money to farm, the banker pointed out to me that what they were charging me was less than the prime rate. So the distortions, it was hard for us to get over the distortions. I know which of my neighbors down by Bushnell bit the dust as farmers and had to go into bankruptcy and so forth. So to me, it raises huge concerns about the future. I don't know whether I answered your question or not.
Thank you very much, Ken McMillan. Yes, Rob, I remember you guys, one of many ag roundtables ago, talking about the 1970s and the gas rationing, and there were embargoes. In the 80s, I think you said if we could sell T-shirts that said, "I survived the 80s as a farmer," how difficult and challenging it was.